The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the December 27th fantastic Friday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call developing your craft. You know, when developing your craft, effective leadership must consistently be developed and nurtured. After all, you and I, we must become great leaders of ourselves if we're going to trade these markets successfully, and therefore, developing our craft requires constant study. You know, if I've not said it recently, please forgive me and let me say it now. Thank you. Thank you for allowing me to develop my craft and for providing me the opportunity to share it with you each and every day. Now, there are 5 ingredients. You know, everything has got a formula. And when it comes to developing your craft, there are 5 ingredients needed to develop it. What we need to do is pay special attention to these 5 areas. Number 1, the area of possibility. You and I, we've got to play that what-if game. What if I had this or that? In essence, we are using the most powerful nation on the planet when we do that. It's our imagination. It's where dreams are born, and you got to start off with dreams. Number 2, the study of opportunity. Sometimes opportunity is closer than you think. Are you want to take advantage of opportunities when the universe presents them to you? Have you taken advantage of the opportunity to learn about the Rhodes Momentum Indicator? Could very easily be the one thing that will open up your floodgates. It most certainly has for me. Number 3, the study of ability. Be a good student of your ability and make continuous investments in yourself to improve your abilities. Always feed your mind each and every day. You know, we feed our body. We do that naturally. Make feeding your mind a natural thing as well. Number 4, the area of inevitability. Ask yourself the following. In all honesty, if I keep doing the same things, do I really expect different results? Something to think about. By the way, crossing your fingers, it's not a very good strategy at all. Number 5, the study of rationality. When you are rational, you'll come to the right conclusion. To me, that means put things down on paper, especially if you're trying to solve a problem. And, of course, get other voices, other ideas, because if you could have solved whatever problem it is you're dealing with right now, you would already have solved it. That's why you need other voices out there. If you pay attention to these areas, they will lead you to greater riches, and you will develop your craft. Well, let's go check out the crafts in the marketplace out here. Dow futures up 19 points. Nothing new about restarting off my day here, telling you that futures are up. Dow futures trading out at 16,441. S&P futures, they're up 1.25. They're trading out at 1837. NASDAQ futures, they're trading out at 35.83, up a point out there. King dollar really struggling this morning. Lots of movement inside the euro, inside of the Great British pound. King dollar back 53 cents. It's trading out at $80.12 right now. Gold trading up $4. It's trading at $12.16. Silver up 13 pennies. It's trading out at $20.05. Light sweet crude up 53 cents right now. It's just trading just slightly over $100. If we take a quick peek around the globe, see what's going on over in Germany and the UK and Germany. The DAX is up 78 points, about 0.8%. Same percentage-wise in the UK with the FTSE. It's up 53 bucks out there. It's trying to take on its resistance areas. It's trying to break out above its highs. Our call-in number is 877-927-6648. If you give us a call, we'd be happy to take a look at your stock chart. Oh, I don't mean to leave Asia off the board here. The Nikkei finished up 4 points last night, so a flat market out there, but really traded off of it, well off of its session highs. The Hang Seng up 63 points, 0.25%, and the Shanghai, that was up a little over 1%, up 29 points. Let's start off with Let's start off with the Euro-Japanese yen out here. The Euro-Japanese yen, if you listened on yesterday's show, I suggested the 144, 145-ish range was the target. Well, guess what? We got that overnight very quickly out here. What we're looking at is a 1 to 2 A to B equals CD up pattern. That is coming up if you're watching us on Tiger TV. If you're not and you're listening on the radio, your mobile device at TFNN.mobi, thanks so much for doing that. I'll tell you the points that we're taking a look at, and you can always catch the archive of this show on Channel 9, or it'll stream to that new, because many of you got new smartphone-type devices out there. Just go to the homepage of TFNN.com. Upper right-hand side, you'll see a button, 3 little smartphone devices. Click on that. The show streams live to you, and you'll see a couple of butterfly patterns. You'll see some Gartley patterns, but it's the A to B equals CD that we're looking at right now. Our 8-point is the low on August 12th. That's at a price level 127.95. The B point out here, that's the swing high from September 19th. That level 134.93 makes a retracement down into a low on October the 8th out at 131.12. This thing now has completed the 1 to 2 A to B equals CD up. It is trading out at 145.02. 145.11 is the 1 to 2 price projection. Actually got up higher than that, got up to 145.67. Hey, no bears in sight here, but when you do a 1 to 2 A to B equals CD, oftentimes you're going to do something different. And why does that matter? Well, why it matters is because this currency pair tracks the U.S. stock indices better than anything else. So if it has completed its pattern, it needs a little bit of a rest just to do something different. Doesn't mean a deep retracement out here, and doesn't mean that it's going to stop right here, because if it decides to move higher, it'll go check out that 1 to 2.618 A to B equals CD, and that would take us into the 149 level. If we go take a look at the actual weekly chart out here for the Euro-Japanese yen, it's up and above all kinds of resistance. It actually has freedom now to run to the 154-ish area, but 144.33-ish, and you're trading right around there. You're trading 145 even right now. That is a primary trading range boundary, so it would not be a surprise to me to see price start to pull back just a little bit, hang out here before it decides to crack through this level. It is in the extreme overbought territory out here, so we'll see. We'll pay attention. Look, if the Euro-Japanese yen continues its ascent higher, so too will these markets that we trade out here. Speaking of currency pairs, the Queen, let's go check out the Queen, see what it is doing here. It's up 124 pips as we speak right now. And what we're looking at here is a weekly chart. Now, what the Queen Mum did here so far today, it has tested the descending trend line. That's a trend line. That's the black horizontal line if you're watching us on Tiger TV. That's the one coming off of the swing point high from July 18th, 2008. It's a weekly chart that we're looking at here. That price is at 160.03. If you go from that trend line to the, or you go from that swing point high to the next swing point high, which takes place May 6, 2011 on your weekly chart, you'd be looking at 149.38. You use that as your trend line. That's the black diagonal line going across my screen. The red diagonal line going across my screen, that is the price channel out there. So we got really 3 areas of resistance that the euro is trying to get up and over. So it tagged the trend line. So far, it's rejected it. It got up and over the last bearish engulfing, big bearish engulfing candle. It took place the week of November the 11th out there. That says that the actual resistance zone was the high of the previous candle because it had a higher high. That level 138.31. You're trading below that right now. So that area has acted as resistance. If this thing tucks its head back inside the descending price channel out there, we will have seen a rejection in the case of the euro U.S. dollar. That says, well, to go back and at least test the bottom of that rising price channel out there. That's what's going on with the Queen. Let's go take a look at the Great British Pound out here, because that too has got some movement in it. That's what's giving the U.S. dollar index conniptions. Of course, inside the Great British Pound, we've been forecasting an A to B equals CD up. It has now broken above the swing point that it needs to do that. That's a swing point from December 10th. That level 164.65. Your A to B equals CD. Your 1-to-1 price projection takes you to about the 168.28 level. Right at 166 is the price projection of a small consolidation pattern that's inside the Great British Pound. We've seen a breakout of that. We've seen the test of that area. And that is the consolidation that takes you back to September 16th out there. So that's what's going on inside the currency pairs. If we take a look at the King, though, since we did take a look at the Queen, if we take a look at the King, let's take a look at the week. Let's start off taking a look at different time frames out here. Here's the monthly chart for the U.S. dollar index. It has... what we're looking at here, the U.S. dollar index made its lows back in February of 2013. That low out there was at 78.92. Makes a big run up to $84.96 out there, and it pulled all the way back down to the bottom. Pulled all the way back down to the bottom during the month of October. Now, you don't really see much in the sense of a bullish pattern out here. This candle right here for November, that does qualify as a bullish engulfing candle, but there's really no body on that trading session for October 31st out here, the month of October in 2013. If anything, that candle there is a candle of confusion we take a look at. And this month here, the month of December, it's really wiping out that bullish engulfing candle. We still have a couple of trading sessions today, Monday and Tuesday before this pattern is over, but on the monthly chart here, we're not really seeing anything that resembles any kind of strength out here. A little bit different picture on the daily chart. There is a pattern for it to contend with, and that is this 0.786 Gartley buy pattern. That means the low from December 18th, the day of December 18th, that level, 79.50, that's what set up that 0.786 Gartley buy. It worked. Now, if price pulls back and it fails, this Gartley will turn into a butterfly. And you say, well, where will that take the U.S. dollar index, Steve-O? Well, it failed. Gartley, 0.786 Gartley, turns into a butterfly. Could be a 1.272. That would take it to 78.37. 1.618 would be 77.50. But right now, we should see good support at about 79.54. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. In the pre-market here, you got 3D Systems leading the charge dollar-wise right now to the upside. Not by much. It closed at 92.06. The last trade fired off at 93.81. You've got the Nugget, the Direction Daily Gold Miners ETF. It closed at 27.43 right now. It's trading out at 28.01. Carnival Cruise Lines, it's cruising to the upside this morning. It closed at 39.54. It's trading up about 50 cents. Last trade fired off at 40.07 to the downside. Here, Twitter leading the charge. It closed at 73.31 right now. Its last trade fired up at 69.96. Facebook down a little bit this morning. It closed at 57.73. It's off about 40 cents out here, 30 cents. Last trade actually just fired up at 57.48 out there. Our call number 877-927-6648. Let's go check in on Goldilocks out here. We've got gold trading up a few bucks here this morning. It's trading up $4. Trading at $12.16. It is trying to take on the swing point high from December 19, $12.26. If it can close above $12.26, that becomes pretty bullish out here right now. Just trading inside that swing point out there. That's where the battle, that's what it's contending with out here. And as the December 19th high, 1226 is my magic number. If it can't bust out above that level, that brings into play the potential to come back and do one of a couple of things. Number one, test the June 28th low. That's at 1179. That would complete the A to B equals CD down, which was a price projection of 1180. But there's another A to B equals CD that is still in play as we speak, and that would take price down to about 1122 out here. So gold still needs a little bit of work in order to prove itself out there. And then, of course, we know that gold will run into some resistance, just like that Euro chart that we looked at on the weekly basis. Well, gold has the same kind of resistance. In fact, let me find the weekly chart out here. At the weekly, at the monthly, we got it all. If we take a look at the weekly chart, if you're watching us on Tiger TV, it's just changed colors on this if I can. Not to green. There we go. We'll change it to black now on the way down. That's this black diagonal line that you're looking at. That's really where we would see Goldilocks go ahead and bump its head. Now, a real strong close today, a real strong convincing move that a bottom would be in, would actually be a close above the open of the session from December 20th. And that open was 1237.30. Now, that would be quite a jump out there. But if we were to see that here on a weekly basis, what you would get is you would get a bullish engulfing candle on the weekly chart. And that's important not as a single standalone candle. That's important because as we take a look all the way back over to the June lows out here, what we'll see over that period of 3 weeks, we'll see a bullish formation, a bullish candle. We'll see a morning star. We'll see a bullish engulfing candle as well. And that says that this area here is truly being defended by the bulls, somewhere in that, 1179 to 1216 where it's trading right now. So very bullish. would be a close above the high from, or the open from last week. Now, the problem is that, there's not a lot of room to run to the upside here because of this area of resistance, that descending price channel. And that takes us really back into the October 5th, 2012 time frame on the weekly chart out here. So we'll be paying close attention to that. Hi-ho silver. If we take a look at silver this morning, it's up 16 cents. It's trading out at $20.08 out here. Silver probably gives us the first indication as to what kind of breakout may or may not be occurring here, because it's very close to trading into that same descending price channel. This is the one that takes you back really into the November 29, 2012 time frame. So this is a descending price channel of over a year. We did see silver try to break through that. It tried to break through that on the trading session of October 22nd when it closed just slightly above it. It stayed above this area for 6 sessions, and then boom, got back inside the descending price channel. So silver is something that we want to watch as well, because that probably gives us our first signal as to what the metals really want to do at this point in time. Light sweet crude here, light sweet crude right now, it's trading out at 100.20. It's trading up above the 0.382 retracement level. I know, maybe it wants to actually make a run up to the 104.42 area. I'm concerned about light sweet crude. My clients and I, we got into a trade in light sweet crude, and then after I took a look at the CFTC data over the weekend, we went ahead and exited that trade because the commercials, that's the large money out there, at least as of not this past Tuesday, but the Tuesday before, they were taking huge net short positions. In fact, the largest net short positions in quite some time. That says that the big money out there is getting ready for a kabam in light sweet crude. And it's not a fight that I care to pick. I don't know about you, but it's not a fight that I care to pick. Right now, the Dow is up. Dow futures, I should say. They're up 27 points. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 39 points. It's trading out at 16,517. S&P's up 2. They're trading 1844. Composite up 6 points this morning. Trading out at 41.73. Russell 2000 up $3. It's trading at 11.65. Something a little disconcerting yesterday was the lack of participation inside the New York Stock Exchange. Net advancing issues were like about 200 or so. That was with the NYSE being up about 0.5% yesterday, and that was not what you want to see. You do not want to see that lack of participation in a market move. Now we're taking a look at the VIX index, trading well below the 50-day exponential moving average, so that is bullish. The 50-day exponential is at 13.95. It's trading at 12.30. However, a low may be in on the VIX. At least there's a candle there for us to be paying attention to, and that was yesterday's candle. It created the hammer. Now, as hammers go, I take a look at hammer candles and rank them 1 through 4. It's a 4 ranking, but nonetheless a hammer, one to be paying attention to out here. That says that the low from yesterday, 1169, ought to be a pretty good low. Of course, when you close below a hammer, if you are long, you are wrong out there. So for those folks that actually trade the VIX or trade one of the VIX products out there, you do have a hammer candle that took place yesterday back at swing points. The last time that the VIX was down in that area was back at the swing point on August 5th. So that level held. And it held with a hammer candle out there. So you got the VIX with the hammer. You got the NYSE, which had really weak, yesterday was really weak participation as regards to net advancing issues over declining issues out there. I really didn't expect to see that when I took a look at the market. So that is a bit of a cautionary sign in the market. In the meantime, let's go take a look at the indexes, see what they are doing here in the market. Let's start off with the S&P 500. The S&P 500, well up above the 1-to-1 A to B equals CD. That's at 1835. You're at 1843 right now. It wants to head to 1854, 1853, right in that range. That will complete the 1-to-2 A to B equals CD. It wants to do that so long as we do not see any kind of bearish or reversal candle take place. At this stage, it is not in the cards. On the longer-term basis out here is the monthly chart. That's the 2350 level that wants to get tagged at some point in time. I suspect we see that in 2014. It's really not that far away. I know we were just it was just a few short months ago, back in April, when we were down at the 1550 level. So we were 300 points above that. You add 300 points to Well, maybe it will be a little bit harder to get to the 2350 level there. Maybe it doesn't happen. Let's not pick the time, but right now what we do know is we've got to break out above a consolidation. Hey, speak about consolidation patterns. Don't mean to really jump around here yesterday, but did you take a look at IBM yesterday? You should have, because that is something to think about. When we take a look at IBM here, it broke its descending price channel. That's the red diagonal line that we're taking a look at if you're watching us on Tiger TV. That's coming off of the highs here from April of 2013. April 3rd, to be specific, is your first touch point out here. That's the open, which was at 214.30. I use as the next touch points out here. It's a cluster using the September 18th close, and that was at 194.42. You get plenty of touch points along the top of that descending price channel. So now we've got IBM back inside the 30-point consolidation. This is the daily chart that we're looking at, which says that IBM's break to the downside was a false breakout. That is bullish. That is very bullish inside of for the Dow, longer term for the Dow out here. Now, the Dow itself, if I switch back to it, which I will, that's broken that 1,000-point consolidation that says that it wants to get to the 16,005, 16,006 area. Well, where have we gotten to? So far today, intra-session, we've seen 16,529. So the Dow has completed the 1 to 1.272 A to B equals CD. So we've got some things to look at. We've got some things to be observing here, not from the standpoint of predicting some type of major top or anything along those lines, but what we have is a market that is now completing patterns out here, and the Dow really has been the kingpin out here. It truly has led the markets on the way up. It has broken that 1,000-point consolidation level. The 1,000-point consolidation level, you could really say the highs here. We would use the highs of, let's say, August 2nd. That was at 15,658. You add 1,000 points to that, you're at 16,658. So maybe what we see here is about another 100-point run, 120-point run. Maybe it even gets up and makes that 1 to 1.618 A to B equals CD in the 16,750 range. That would not surprise me because of the move here, the acceleration move off of the C point of this A to B equals CD up. At this stage, do not try to short this market. My suggestion is do not try to short this market. There is no signal yet whatsoever that I can see. And just because it's completed one level, just because the Euro-US dollar or the Euro-Japanese yen, is up against an area that should suggest some kind of pullback out here, just because the Dow has completed a 1 to 1.272 A to B equals CD, those are not sell signals. Those are potential pattern completion areas. If we take a look at the Russell 2000 here, yesterday, the Russell 2000 creating the opposite of the hammer candle, created a little shooting star out there as it completed its 1 to 1 A to B equals CD. Now, that alone is suggestive of a reversal candle. It'll need follow through today, which it hasn't had at this stage. Just because that little candle, if you're watching us on Tiger TV, is red, that doesn't mean anything. It just means where price opened and where price closed. It would need follow through, meaning a close below yesterday's low. That's at 1161.41. You're at 1164.09. But the Russell has completed its 1 to 1 A to B equals CD. Not as strong as the Dow is on its price move out here, but still strong nonetheless. If we take a look at the NDX 100, it's got further to go before it completes its pattern out here, but it keeps doing it with these small-bodied candles. Not exactly convincing. Not convincing me after that strong move off of the C point that it actually wants to head to 3684. 3628 is its 1 to 1 A to B equals CD, but these small-bodied candles have got to make somebody say, something to think about. If we take a look at the New York Stock Exchange, probably this is where it all comes together. Right now, New York Stock Exchange, it's trading out at 10,354. Let me take a quick peek in. The net advancing issues actually stronger today, right now, as we speak, than it was yesterday. You got 422 net advancing issues. That means or a little bit maybe about 1.2 to 1 net advancing issues over decliners out here. But what the New York Stock Exchange is trying to do is tag the swing point high at least. Tag it or get above it. And that swing point high takes you back to October in 2007. That level 10,387.17. It's only got another 30 points or so to go. I would say Friday, and based on what the Euro-Japanese yen did overnight, this would be the best chance. But doesn't have to do it today. It certainly can do it Monday or Tuesday. We want to watch to see what happens at that level. The primary trading range boundary line, that's at 10,430, so that's just above that level of the swing point high from October 31st in 2007. That's what's going on the monthly chart there. A quick peek in on the ETF structures out here. Let's look at the diamonds out here. Lucy in the sky with diamonds. It's above the 1 to 2. I'm sorry, it's above the 1 to 1. A to B equals C to. That's at 163.83 out here. 165.64 would be your 1 to 1.272. A to B equals CD. Volume yesterday did 4.9 million shares. Pretty tough to really use volume as your volume to have significant meaning during this holiday week here. Most traders aren't really around. Folks are taking the time off, so you expect light volume sessions. What would be interesting is if you see big volume sessions on days like these holidays out here. But the Dow Diamonds looks like it's on its way to complete the 1 to 1.272 A to B equals CD. I would be more focused on the index than the actual ETF structure out here. The 1 to 1 on the IWM, the Russell 2000, just slightly overhead about the 116.36 level. The intra-session high yesterday was at 115.97. So pretty darn close, only about 40 cents away from having completed that pattern. The candle formation inside of the IWM yesterday, it was not a bearish signal whatsoever, unlike the index itself. If we take a look at the Q, we did take a look at the Qs. No, I took a look at the NDX. Here's the Qs out here. Again, you'll just see those small-bodied candles, but it has a confirmed A to B equals CD. The B point on this is December 9th. That top is 86.53, 22 million shares out there. We got above it with 28 million shares on December 23rd. So that was actually quite impressive that it was able to make that climb. The ascent here inside the Q should take it to 89.21. It's trading into its primary trading range boundary line right now, and that's at 87.77. Let's go finish off the ETFs. Let's take a look at the SPYs out here. The SPYs here now this morning trying to complete their 1-to-1 A to B equals CD. That would take it to 184.31. The high so far, 184.18. So we can say that pattern is close to completing, but it looks like it wants, the way that I read this pattern, it actually says it wants higher price out here. 186.23 would be its next move. But we'll just have to wait. We'll have to wait and see if ever there was an opportunity for bears to try to rear their heads. About now is the time. Or maybe it comes on January 2nd out here. But at this stage, everything is still bullish. Momentum is still bullish. There's really no bearish signals out here. Just some pattern areas where we need to be paying close attention to. Let's go check out some of the other stocks here, some of the other core stocks, see what they were doing. We looked at IBM. That's very bullish because it's back inside its trading range. And when you get back inside the trading range, it says it can move all the way up to $211. Right now, what it also did here, and what it's doing this morning, I should say, the swing point inside of IBM that it's taking on is from November 20th. That has 3.6 million shares. Now, yesterday, it got up into it with 3.3 million shares. Remember, just a few minutes ago, I was saying, what would be impressive is something that was coming, where you had volume during this holiday sessions that we're dealing with here. Well, that says that IBM is impressive here because the resistance area really is that little doji candle, this little morning star reversal, bearish engulfing. You have it all, and that's the doji from November 20th out there. So 186.24, you're trading at 186.17 right now. A close above 186.24. It says it's a bit of a breakout here. It says it brings the next swing point in play. That next swing point takes you back to September 19th at about the 195 level out here. So IBM coming into a swing point with volume yesterday, testing that swing point here this morning, testing the swing point high, I should say. Volume so far about 359,000 shares. So too early to tell, but what we do know is it was moving into that swing point with some volume yesterday, and that was on IBM. And, that's the leading line weighting structure inside of the Dow. ExxonMobil out here, boy, you take a look at this monthly chart. This is clear that it wants to break this 38-point consolidation. That says that what ExxonMobil wants to trade up to is about, 94 and 8. That gets you to 102, 132. You're trading at 101.57 right now. So it has broken that consolidation pattern. Volume-wise, it's going to be light, but nonetheless, it has broken a 38-point consolidation on the monthly chart out here. If we take a look at Apple, Apple has certainly struggled as the last couple days, but all that it's really doing, all that it did yesterday, was it tested the gap up area. Now, this is important to be paying attention to. Look, gaps are your friends. Gaps are nothing to be afraid of. Gaps are where you get a ton of information. And if we take a look at that gap up, that was on December 23rd. The low of that session is 562.76. You're traded 562.59 right now. So a test of that and holding that area, meaning closing back above 562.76, that would be bullish. That would be your first test. Now, 17.9 million shares on that gap up. Yesterday, the pullback was on 7.2 million shares. Here's where you can take a look at two different charts, IBM and Apple. And in the case of Apple, so IBM takes out or moved into a swing point with volume and a resistance area set up by where we saw some bears hanging out. In the case of Apple, it's pulled back into a bullish zone with light volume out here. Now, if it does close inside that gap, that says, okay, it can run all the way down. It could test probably the swing point, that little hammer candle from December 18th, the high of which is about 551 out here. We'll just see how the day trades. But about two more tests if this area here holds, again, that level being 562.76 out here, that would actually be bullish for Apple. If it can have three tests of that area on lighter volume, that gap, that says that becomes a very strong area of support. And that is another way, a different way to actually use gaps as your friends. That's called the snap and something or other. Snap and crackle, snap, crackle, and pop. Pop to the upside if, in fact, it can hold that area. How's that for quick thinking? If we take a look at J.P. Morgan out here, J.P. Morgan trying to complete an A to B equals CD up. It's got a confirmed A to B equals CD up. That's because of the July 26 swing point. It had 73 million shares. You got above it with 102 million shares on the trading session of November 22nd out there. 1-to-1 A to B equals CD is $60.57 out there. So it's on its way to complete that. It's trading at 58.31 right now. Google still it's up at all-time highs at 1116.65. Right now, the Dow's up 29, S&P is up 2, Goldilocks up $3, silver up 12 cents. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow is up 32 right now. S&P is up 2 points. NASDAQ relatively flat. It's up 71 cents. Russell 2000 flat as well, down 20 pennies out here. New York Stock Exchange up 24 bucks. So in setting up the charts, what is it that we're going to be paying attention to today? I would say we'd be paying attention to the chart of silver out here. Right now it's up about 13 cents out here. What we're really watching for, I think silver is the one that gives us the first indication of a potential breakout here. And it may not be today. It may be Monday. It may be Tuesday. But what I would do is I would go ahead and create a little trend line. If you don't have access to the continuous contract, you ought to get access to it. Just simply it'll be easier for you to be able to trade. The price level is probably, I would have to say, a close above I don't know, could be maybe $20.26 or so. So it's not only another 20 cents out there where you could see a crack of that descending price channel out there. So I'll be watching silver. I'll be watching Goldilocks as well. I gave you the weekly, gave you the daily chart out here. The weekly chart, which would be really mounting a charge, would be a close above 1237 out there. The daily chart, I don't think that only needs about 1226, I believe. Is that correct? Let's see, 1226, yeah. That's the number out there. The 12, the larger number I gave you, the 1237, that would create a nice little bullish engulfing candle, which is important coming at the lows that we are traveling in right now. So we got time out there. Certainly the VIX index is something to be paying attention to because it did form that hammer candle here yesterday. And if that hammer candle gets broken, that means a low below yesterday out here. Boy, that'll tell you that you've got some higher prices coming at you for sure. The low of yesterday's candle, what happened here? I lost my cross here. Big cross here. There we go. The low of yesterday's session was 11.69. You're trading at 12.39 as we speak here right now. I'd be paying attention to the New York Stock Exchange. Let it complete at least its test of the swing point high from October of 2007. That level again is at 10.387.17. Folks, a close above 10.387.17. A test of then 387.17, and it closed back above it. We will then have the New York Stock Exchange participating in the consolidation breakouts like we see inside of the S&P 500, like we see inside of the Dow, like we see inside of the Russell 2000, like we see inside of the composite, basically like we see across the board out here. So it is the New York Stock Exchange where we probably get the largest piece of information. Let's go to Lou in Nashua. Lou, thanks for calling. Thanks for holding. How are you this morning?
Very good. The usual question.
The usual question. All right.
Yeah.
And
contract.
Are you in the trade? Are you in the trade?
I was thinking of getting in this morning.
Okay. I would wait. I would wait on this. You know, the earliest possible spot that I can see candle-wise to possibly get in would be as a test the December 19th low, $44.26, and that would be a real iffy trade at this stage. You'd like to see more of a normal pullback. You know, we're starting to see a bit of a reversal. Not anything that I would suggest going out and shorting, but as far as a pullback, you'd like to. You know, Lou, your better areas are probably about $4.09, maybe $3.81. Those are just using dead cat bounce, 0.382 retracements or 0.618s out here. But so far, I believe the trend is still up inside of natural gas. I only got about 10 seconds, so I can't pull everything up that quickly. But I would be paying attention to this candle session right here, December 19th. You're trading into it right now, and the low there is 426. If we see it hold that level, maybe there's some type of trade. But it's just working off that overbought condition. Thanks so much for calling, and have a happy new year. Folks, stay tuned. The Bull-Bear Binary Option Hour, sponsored by Nadix, is up next. Have a great weekend. Great to be with you. Be safe out there. I know you'll be going to a lot of parties. No drinking and driving. Take care, folks. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.